Okay, so let's make a full breakdown of the situation that we currently have on NZD CHF. Now, starting from the monthly time frame, what do we see? Now, on the monthly, we consider the market is currently retesting a strong level of previous monthly support, which is now turned monthly resistance at this area, from which we can definitely expect the market to give us a nice move to the downside. Specifically, if you have an impulse in the market and you need a retracement, where are you supposed to be placing your Fibonacci? Specifically, if you want to measure this retracement, you have to take your Fibonacci from the high to the low of the impulse. And what we can see in this case is that the market went for a perfect test of the 0.786, rejected it to the downside, and then the market currently just retested again the monthly previous support, not resistance, which the market is currently rejecting. So on the monthly, to sum it up, we have previous support to resistance, which the market is rejecting, and we expect a deeper rejection to the downside. Going down on the weekly, what do we see? Now, on the weekly time frame, first of all, did we expect this move to the upside, which NZDCHF has just provided? Absolutely yes. In fact, if you remember in our previous analysis, after the market had created this weekly information, from here we definitely wanted to see the market give us this move to the upside, which is exactly what the market did. And I will link in description the previous analysis in which I explain all the reasons for which from here we wanted to see this move to the upside. I will link all this previous analysis in description so you can go and check it out for further reference and more free education. And now, what is the situation? Now, from a weekly perspective, even though on the monthly we are rejecting resistance, on the weekly we do have support at this region. In fact, this area here was the neckline of the information, so a support area, which the market is currently again testing. However, it is also important to notice that the market has just created a double top because the market had already tested and rejected this area to the upside. However, then the market rejected again the zone down. So we could see this support area break to the downside for a continuation lower and for the weekly time frame to actually align with the bearish view that we have on this pair from a monthly perspective already. Going down on the daily, what do we see? Now, from a daily perspective, we see a very interesting situation which is starting to line up. In fact, what do we know? We know that this area here is a very strong structure for this pair. In fact, this zone here is the neckline of this W formation. Now, after this W formation, we definitely expected from here the market to give us a nice move to the downside and complete the pattern at the previous resistance, which is now turned support. But as I just said, previous resistance now turned support because this area is a support area for the market because it is the neckline of the W formation. And since the market is currently breaking below the structure, this support will be turned resistance if the break below this area will be confirmed. And that will bring a good opportunity because at that point the monthly and the daily time frame will have aligned. Yes, we will still have the negative confluence factor that we have from a weekly perspective because we do have support here, but anyway, we do have good confluence. Now, if we go and see what we have on the NZD and the CHF from a COT perspective, so commitment of traders, which is what hedge funds are currently doing in the market, from an NZD perspective, we can see that with the last report, we went from 6.9K to 3.2K net positions. So definitely net positions decreasing with thousands of longs getting closed. So the NZD is getting weaker. And if we go and see what we have from a CHF perspective, we can see that with the last report, hedge funds opened 200 longs and closed 300 shorts. So definitely CHF getting strong, which is exactly what we need. Now, if this break to the downside will be confirmed after the break on the retest of this structure, what we will be doing with students. Now, on the retest, we will have a great opportunity to be looking for more continuation to the downside as the monthly suggests. But as usual, just because from here we want to see the move to the downside, can we just short? Obviously not, because trading is reactive. Trading is not predictive. So on the retest of the level, what we will be doing with students is monitoring price action from a 4-hour perspective, waiting for the market to provide to us one of our valid entries. And as soon as the market will provide to us one of our valid entries, we will be taking a nice short, with a very good risk to reward and very good probabilities for the move to the downside and completion of this impulse, correction, and impulse pattern to the downside. Now, if you enjoyed this free analysis and education, make sure you drop a like and a comment. It really does support the creation of more free education and analysis for all of you, and I will see you in the next video.